Mic check, mic check. CTM, good morning, good afternoon, good evening, wherever you are in the world right now. I am so glad that you're here. It is good that you are here. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. We got an exciting session ahead today. We're going to take a look at the markets. We're going to take a look at some strong TA. We're going to be taking a look. We got a buy signal just printed on GBTC this morning, right? Triggered last night, entry this morning. We'll take a look at where we are, CTM 2.0. We got a lot going on inside the Discord. We're going to get into all of that. Great to be here with you all today. Looking forward to what we uncover. Starting off looking at this chart on the daily chart of Bitcoin, right? Bitcoin US dollar. And you see, and everyone sees that since that November high of $69,000, price has been in correction, and what looks to be now a confirmed bear flag, right? We have it outlined over here, is currently in play. Within this, price has been ranging here ever since January. By the way, if you remember where my mouse is right now, where Bitcoin put in its 12-month low, right? Bitcoin currently, by the way, is 45% off. Look at this. I think people get a little bit confused about where they are, right? Bitcoin right now, that's Jordan, what are you talking about? That's 26%. Now I said 12-month low. I said 12-month low. Bitcoin currently 43% off the 12-month low. And you can see that it is currently 40%, we'll call it, off its all-time high. People need to, every once in a while, just zoom out a little bit and realize, what's all this malarkey going on over here? We got to clean this up a little bit. This is all of a sudden at the very beginning outside of the presentation, but don't worry. Don't worry. We got a lot to cover over here, and it's going to be good. Just taking a zoomed out look at this chart over here, and Bitcoin is up to the right, right? 13-year extraordinary bull market. Price 40% off that all-time high, 43% above off of its 12-month low, and has been consolidating sideways ever since it's broken out into that bull market. The reason I bring this up, right? The reason I started today's session, let me get off that log, off with this view over here where we're looking at that correction that we're currently under, right? The bear flag that is now confirmed. When I say confirmed, that was because the way that I was viewing, the way I was looking at was a pendant that was viewing, and we broke out on the upside of the pendant. And then after that, what happened was we broke down, and we said ahead of time, if we broke down, then I'm going to go with, at that point, the formation of the clear and just visible bear flag that we're looking at. So the worry is always be looking at your risk, right? Always be looking at what your potential downside is. A lot of people get confused between expectations, ideas, and execution. Don't be one of them. I know you're not if you're here watching this right now. Now, watching this bear flag over here, and the reason I bring it up is because in 2022, this is not starting now. This is not starting after the market's corrected into January. By the way, equity markets also put in this low in January. Bitcoin, since that low in January, has made higher lows up until this point. Equity markets didn't do the same thing. They actually made two more legs down of lower lows. So that could potentially be significant. Bitcoin, which peaked first in November, might have bottomed first here in January. We don't know. We don't know. Since January, though, Bitcoin has been consolidating in a very tight range inside this bear flag. And there's been ups and downs throughout it, right? And the last up we had was just the other day. We had this black diamond, double black diamond entry over here. And right now, price is still breaking out of that, not off of the low of the bear flag. I have the low of the bear flag off of these two wicks, right? And then over here, where you can see on a closing basis, we have this lighter trend line over here. Price so far holding that. As price was down over here on Monday, we said, you know what? We're going to keep this line over here. We want to see if price could recover. We drew in this green double black diamond line. And we want to say, not calling for it to go ahead in that same day break above it, but it certainly did. You also noticed that you have these wicks over here at the bottom in January, again in February, a light wick over there. Sellers were not really able, that could change. We're going to talk about if it changes what happens, but sellers were not able to push down below. They were not even to take it further and to test the bottom and the support of that bear flag. Instead, buyers stepped in. They've brought it back above. If you look on a 3-day chart over here, you could see the wicks very clearly over here, another wick being potentially put in. And I just want to point out, in the past when we've seen strong reversals out of a correction, not over there, let me come to the highlighter over here, CTM, you can see these big bars that occur, these big bars. This is the 3-day time frame, right? This is a 6-day time frame over here. And that's what I want to see over here if indeed, and again, that needs to develop. We have the next 3-day candle closing in another, 1 day and 8 hours, right? And I want to see some type of strong follow through to wonder whether or not that potentially we may be looking at the testing the upper resistance of this bear flag next. Now, if we do break down, it's quite possible right now as we consolidate inside this bear flag that we could have a resolution to the downside, to the upside, which way, we don't really know. We're first watching over here, this important line over here where we wicked into twice. A break below there almost assuredly sets up a test of this line right here. Below this line, I personally believe, and I don't know what it would look like or how it's going to happen, but there's a strong potential and possibility that the summer lows over here and in June and July are tested and potentially taken out. We are looking over here, that line that I'm pointing out to you. You all know that's the channel Bitcoin has been running within, consolidating for the past year plus now. So that's what you're watching for as far as a technical breakdown. But here's the thing. Here's the thing, right? Most people, when I say most people, I'm talking to all of you. You are aware of the technical breakdown on Bitcoin, and it's not going to be if it happened down over here, but it was way up here. Let's take a look at that. If I could just drop back over here for a second. I want to bring up this chart. What you're looking at over here is since when price made the technical breakout into the bull market. Here's the halving event. You all know that we front run the halving, right? Will we be running the 2024 halving? Is the 2024 halving going to affect the price of Bitcoin? We'll be talking about that in sessions ahead, not today. We're looking over here. This is the halving. This is the technical breakout, retest, resumption off. And there were a couple events over here. I don't think that this is when Elon over here basically said, you know what, Tesla's no longer accepting Bitcoin. Bitcoin does not incentivize green energy. He got that very wrong. Over here was the exact time that he sat down with Cathie Wood of ARK Investments and Jack Dorsey and was like, oh, I was wrong about that. It actually does incentivize clean energy. But nevertheless, over here, this was the first time during the run, the bull market run, the run of the bulls, that I said something's not right, this is not clear, get neutral. But it wasn't that clear to everyone out there when I said that. So I made sure that was not going to happen again. Now let's talk about good TA. Let's talk about bad TA. I don't think we even need to talk about exceptional TA, right? That's self-evident. For though many are called, few are chosen. The ones that are chosen, it's entirely up to you. It's entirely up to you, and you have to make that decision. Now, many people, they have their own ideas. Many people run numbers on calculators. Many people envision what happens if this happens and that happens. You're not going to make it. It doesn't work like that. But anyway, that's a song for a different day. I want to talk about this green line over here. You can see this green line over here, and what this was this was the confirmation of what I called the wave 2, right? This was what I was referring to as the mid-cycle low, and we had wave 1, and then we had wave 2. By the way, if you remember, that was called time and day, where we peaked out over there. How's that for bad TA, right? Now, do you remember how many times I said this line over here was the peak of wave 1? And I said never before in Bitcoin cycle history has the top over here of wave one after broken be taken out to the downside. I mean, over and over and over again, that was presented to everyone and just thrown out there that, listen, never before in cycle theory has the top of wave one been broken. If that were to happen again, lots of heads up and warnings were given. Most importantly, and I know that everyone remembers, it's very easy to see over here. We have it over here highlighted in yellow, that red line over there, because I made a mistake the first time. Because over here, when, get neutral, wasn't very clear to everyone. There were still people out there who continued, rightfully or wrongly, to lean in hard with leverage, not lightly leverage, but they wanted to take risks. They were looking, as I was, for something like a melt your face off move. Now, here's the difference, is I'm able to pivot, right? I'm able to turn on a dime. I don't get tied down to any ideas or beliefs. For me, it's really about execution, but I didn't think I did a very good job of, and even though I spent 1 hour on that Friday before the breakdown, just telling everyone that I felt like someone had just jumped into a pond and muddied the waters and something's not right, and that's not a V. That's not a V because we came back down and, get neutral, but it wasn't clear. It wasn't clear for everyone. I wanted to make sure this time it was very, very clear. If you remember here, Thursday and Friday on CTM, we spent a long time talking about this potential technical breakdown and what it would mean as it occurred in real time. How's this for bad TA? It was, the heads up was given. Here's the video right over here. And we said 53,140 exit. Neutral and waiting for clarity. Yes, I'm holding my spot. For sure, I'm holding my spot. I'm not selling my spot unless Bitcoin becomes what I deem to be overvalued. And at 53,000, it's not even close. You could have fun paying taxes on that. I'm not doing it. But I am taking profits from everything that I positioned into off the mid-cycle low because something's not right over here. This is not supposed to happen. That's a big technical breakdown. And because I wasn't very clear and loud over here for everyone, so everyone got it, I want to make sure no one misses it. Bad TA. That's bad TA because Bitcoin did not moon, Jordan. Bitcoin did not hit $180,000. It did not hit $250,000, and it did not hit $350,000. And that is then therefore bad TA. Few are chosen, and it's entirely up to you because many are called. And I hope if you're watching this right now, that you are also at the same time able to learn from your mistakes, that you are always looking to improve and do better so that you can make sure to change your circumstance in life and therefore change the circumstances of many lives around you. That's truly, truly what I desire for you, but it's up for you. Talk about bad TA over there. I can't believe that the alarm was sounded. This was posted public on YouTube. This was posted on Twitter. Made sure that everyone knew that neutral is therefore a position of strength. And I think it's important for looking at what happened in the past in order to help you continue moving forward. The reason I point out that big breakdown over here, right, taking out the peak of, not only taking out the peak of wave one, but for us, the signal over here was this trend line break. This is what the video spent the whole time explaining over here, that trend line break and why that would be a technical breakdown and why that would cause profit taking, and why that would cause to get into a neutral position. By the way, since then, there's been one right over here. This was a buy entry on a black diamond, a conservative entry, excuse me. Stop loss hit either over there or at the peak over there. And since then, there's been one more over here. That entry is still live over here. Stop loss is at the bottom over here. It's not really that difficult. A lot of people, though, get very confused out there. They make things a lot more difficult than it is. I understand that. I know that. I'm trying to help you clarify it, to take away, to push away all the noise and to see things clearly. That's what we're trying to do, is continue to help everyone improve. But the reason I point this out this morning is because I want everyone to be aware of another potential breakdown, a big technical breakdown that could occur. You see why I don't want to sell my spot. Other people maybe potentially do. And I think that everyone should be aware of all levels at all times. And that's why I point out to you this morning, this area over here, breaking down outside this bear flag and then taking us out over here, that could potentially be very much bad new bears. Now, I am under the impression that risk is not the time to sell risk at the beginning of a rate hiking cycle. That occurred over here in the 16th of March is when the Fed got off liftoff, raised rates. You all remember, you all know coming into that period that I was sounding the alarm that, hey, listen, a lot of people are really bearish over here. Not only are they really bearish over here, this is right over here in that area. There's a tweet on it. That's when I put on my laser eyes. That's when do you remember when I took my laser eyes off? Go back on Twitter. You can check it out. It was the first week of December I took them off. Oh, how's that for bad TA? Bad TA. Keeping people protected, getting neutral over here. Nevertheless, right? This is generally a time when you're looking for equity markets to recover out of the volatility going into that first rate hike. This was all not, let's say, unexpected to us all. Now, having an idea that around that first rate hike that you should expect volatility, a correction in the equity markets, and then, and then happening in real time, that's two different things. Nevertheless, because the correction happened before the rate hike, that was the signal that most likely we're going to see a bounce from there. And here we go. We are currently bouncing. I want to take a look at something what I deem to be very important this morning. It's two things. First of all, the 10-year, I want you to keep track of this. Now, I do believe that you should follow those, that not that you should follow blindly, that you should follow those with a history of getting it right. You should use them as a reference for helping form your own opinion. Now, I do hope, and I know this art has been lost. The art of critical thinking, it has been lost upon I don't even know how many generations. If you go back and you do a little research and you study what happened with the Rockefellers as they revamped the public education system, or I should just even say education system within the United States, you may find out clues and why potentially that art of critical thinking has been lost. Nevertheless, it has been lost, but I encourage you to learn. And a large part of the mentoring that takes place here on this channel, by the way, if you're new, welcome. Make sure you subscribe, smash the like button. And if you're watching this yet and you have not yet smashed the like button, please go ahead and boom, 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 crush it right now. Zach, I'm learning, by the way, myself, how to go ahead and be able to filter out the noise. I take full responsibility for all my mistakes. I am learning each and every day. I am growing, and I plan on doing that the rest of my life. Looking over here, I think this is probably the most important chart happening in the markets right now. You're looking at yields on the 10-year, currently at 2.86, and it's seemingly going parabolic. Now, I say seemingly, by the way, what a beautiful, just follow my mouse horizontally. Follow my mouse horizontally over here, and you could see that, what a beautiful breakout and retest right over to there. And then this is, I say seemingly, because if things break and at any point in time we really see yields go parabolic, that we're in a frightening situation. There was no question about that. But I do believe that what we are looking at right now, from my vantage point, from my view, is a parabolic move. And generally what happens is one of two things. Either when this trend line breaks over here, is that we're going to see a waterfall down, a big correction over here. By the way, today we're looking at real interest rates turning positive. Now, once inflation, put it up here, that's 3%, put inflation up here, right? If that starts peaking, I don't have the chart I wanted to show you. I have that on a different machine. I'll show it to you and present it to you with such clarity in a day ahead, in one of the days ahead, but just follow me for a minute. Like, let's pretend real interest rates is up here. Interest rates, that inflation is up here, right? And if that starts coming in even a little bit, and you're seeing all of a sudden real yields rising, bonds might become attractive again. They might become more attractive than equity markets. Now it's dependent on earnings. By the way, Netflix, I told you how important this earnings seasons were. Netflix, by the way, I mean, showing strong over there, right? Putting a lot of weight over here, big correction on the NASDAQ. And that I think last I checked, Netflix was off 25%. This earnings season is very, very important. Now, I don't think that, and maybe I'm wrong, I don't think inflation has to do with why you're seeing subscribers leaving Netflix. I think it has a lot more to do with competition. There's a lot more choices now, and people don't have to just watch Netflix for streaming. They have other choices. They could go for what they think is the best content, you know? Many other reasons as well. But regardless of that, if one of two things could happen on a break of this trend line, we could see price waterfall down. Or another big tell would be if price came down only a little bit, and then all of a sudden it reverses the other way. That's the beauty of having a line in the sand, this sell impulse over here. It gives you an indication that this is an inflection point. By the way, we all know here at CTM on these type of breaks, right, stop loss would be whatever the high of the move was. You're protected then on the upside. Is that counter trend? Well, it depends on how you look at bonds and in what time frame you're trading and how you're looking at them. A lot of people right now are looking at this as up. We're towards the upper end of a band. If bonds don't reverse course over here, then we are indeed looking at a new paradigm shift, and what that looks like and what that means, well, we'll get there when we cross it. It's not only that, you're seeing the DXY come off a little bit today, but that's because the Japanese yen is showing some strength. You have to wonder, or at least I'm wondering, is that because real yields are rising right now? Is that because the Bank of Japan is out there intervening? How soon into they intervene? Are we potentially looking at some type of shift that's taking their place? Or is this just going to continue over here, watching the dollar, the DXY, rise against the euro and the Japanese yen? Just a bit of a heads up. And by the way, what a great call that Raoul Pal made with the inverse head and shoulders here on the DXY. This was coming back into 2021. And you could see since the breakout of it, what a powerful move the DXY has put in indeed. But anyway, I think that right now for me, the most important thing to be watching right now in the markets overall is right over here on the 10-year. The 10-year is what has been causing stress to the equity markets, is what's been causing stress to Bitcoin. And if we do get any type of breakdown over here, raising my hand, I believe you're going to see a pump on risk. And where that goes and what happens next, I don't know. In just yesterday's session, I gave you a pretty good rundown of what happened here on the NASDAQ in 2008, in 2000. And the main takeaway of that is only be concerned if we take out that low over here. At that point, we could be looking at a big, big leg down. All right. What else are we looking at? By the way, this was a beautiful chart I saw yesterday. Steve had shared this with me at another point. I just saw it again yesterday. Innovators, right? A lot of people think that, that they're late to Bitcoin. I put out a tweet this morning saying you right now are an early adopter to Bitcoin, and people don't even realize it. They're like, no, that's people that were before 2017. Well, they were an early innovator, right? They were an early innovator. You're an early adopter. This goes off not time. This goes off of how many people are actually take adoption. We're looking at 200 million holders of Bitcoin right now, headed towards that $1 billion, that 1 billion users, which is estimated to be occurring sometime around 2024. We are getting ready to potentially make that jump over the chasm. I call it liftoff. It's not that I call it liftoff. The adoption, the technology adoption life cycle has been around for a long, long time. It's not unique or new to Bitcoin at all. It is the S-curve. And over here, you can see that critical mass as you jump the chasm. By the way, Steve is pointing out over here from an Elliott wave counting standpoint. I personally don't really count waves. I ride them. But nevertheless, he's pointing out that wave 3, going off over here, the peak of wave 1, you're looking at 1, 2. Wave 3 is normally the most powerful of the 5. And he's saying that potentially this wave 3 that we're currently in as we consolidate for a year You can see the beautiful channel he's drawn over here. It's a really good piece of art over here. Is going to give us this wave 3, the powerful one over here, is going to be what causes us to jump the chasm, to make the jump into liftoff into the ultimate market opportunity. Because as we reach that critical mass of users, that's what causes the jump into the ultimate market opportunity. People are will find out that Bitcoin is exponentially growing asset. It is not experiencing diminishing returns. They just have trouble wrapping their heads around it. But you watch and you will see we are getting ready for the big ride, and we are going to be doing it together. By the way, what we're looking at over here is Grayscale, GBTC. I myself had a buy signal occur over here. That signal occurred at the close yesterday and took place on the opening today. We'll talk about that with a little bit of clarity in just one moment. Speaking of Grayscale, right? This tweet over here, Bitcoin spot ETF is coming. The government is changing their view and language around the most important trade that matters. I'm referring to, of course, President Biden's executive order. And I'm also referring to the complete 180-degree turn. Janet, there will never be another crisis in our lifetime, Yellen, U.S. Treasury Secretary, in the last few weeks in the way that she is talking about Bitcoin. And it's coming because the U.S. wants to make it known as this new monetary structure, whether you want to call it Bretton Woods 3. And by the way, I'm now under the impression there's not going to be a sit down, a nice little sit down for Bretton Woods 3. It's already underway, right? Russia going ahead after being sanctioned, after having their reserves confiscated. Oh, the U.S. dollar is the reserve currency of the world. If we want you to have them, but if we want to take them, we're going to freeze them and take them from you. Okay, that's fine. I think the U.S., as you saw and everyone knows, that the last thing before the war started, in the 24, 48 hours leading up to the war, both Ukraine and Russia went ahead and made Bitcoin, favorable Bitcoin and crypto laws in their country. You have to question why that was one of the most important things right before the war began. Simon Dixon was the first to bring that to my attention. If you're not watching or following Simon's work, I think he is a good reference, someone that you could go ahead and use to go ahead and form your own opinion around. And I think that Bitcoin Magazine is asking me to write an article about this. This is just complete speculation on my part. I am very good at spotting trends early, about reading in between the lines. You all here at CTM understand that a large part of what we do is just learning to think a little bit differently. And it's their change from coming from the government, from Janet Yellen, from President Biden, that is just kind of leading me to believe that, yes, the U.S. is a lot closer to approving that Bitcoin spot ETF than before. By the way, I'm not one of those people who is wondering whether or not that is good or bad for Bitcoin. Why would it be bad for Bitcoin? Having one entity, such a large entity, controlling all those keys is obviously not really good for Bitcoin. However, we get to run our own nodes. We get to take our sovereignty in our own hands. We get to cast our own vote with the way that Satoshi has meant it. And Bitcoin, right, one of the things about it is permissionless. People get to do what they want with it. You can't control them at all. Let's play some head snack over here. I'm going to drop the beat right now.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
right? Matt, is that worrisome? Right? 10-year breaking, a 40-year in trend line. Is that worrisome? It all depends. And I mean that not tongue in cheek. I really mean that, whether or not I'm trying to find a chart over here, Matt. It really is dependent on whether or not we're just seeing over here right now towards that top, which is known as like a liquidity grab, and whether or not this thing is soon going to reverse, right? Or if this is going to see a new paradigm shift, if bonds are going to break out over here to the upside. Now we're at, as we're approaching that 40-year trend line, Matt, that's when it's an inflection point, right? That's when you have something to kind of like base your risk reward around, right? So if you see coming into that trend line, if you see a big sell impulse triggered and you're seeing a sell signal, well, then it's very easy to manage your risk off. And it's also very good from a risk to reward standpoint. Now, whether it holds or whether it breaks or anything, I don't know, right? But Matt, as you've been watching and you do know, down over here when people were telling you to buy bonds and wear diamonds, I was like, no, this is uber asset inflationary. And then over here when it corrected, and again they said buy bonds and wear diamonds, I was like, no. This was the most important trend line during the summer over here during our CTM training sessions. And I talked about this trend line over here, the most important trend line in 10-year. And we were just looking for it to be able to go ahead and reverse out of over here, right? Then over here, as it broke out over here, and you had, what is his name, David Hunter, talking about 1.5. All this we did, we said, we drew this beautiful trend line over here like that. And we said, well, he's calling for a level that's below this trend line breakout. That doesn't seem right. That doesn't seem right at all, right? And we were looking or calling for somewhere around 250. And now look, I'm just following what's on the charts. I know it's a good place to measure your risk reward off of. That's all. I don't know what happens next. But I do believe that personally, from a pure speculation point of view, this might potentially be a really good spot to buy bonds and wear diamonds. But I will wait for the technical trigger and signal before going ahead to look to, if I were to initiate a position, to do it. Yeah, and you could do these things over there on the Chicago Board of Trade through things like sorry, I was looking at this trading contest, this global trading contest. Whatever broker that was is irrelevant. You could use Interactive Brokers, you could use TradeStation, whatever have you. There are also E-mini futures if you want to trade the 10-year, anything like that. Let's talk about it. Let's talk about the settings over here on GBTC. Let's move over to there right now. So I just want to say to everyone, thanks for joining us. If you didn't yet, smash the like button and you appreciate the content, go ahead and do that. If you're not yet subscribed to the channel, make sure you get a load of this bad TA, this bad risk management. Have a beautiful day, everyone. I will talk to you soon.